Welcome back to the deep dive. I'm glad you're here because, honestly, we need to talk about what just happened.
hmm
If you've been scrolling through the news or just glancing at your portfolio, you've probably noticed something, well, dissonant.
That's a good word for it.
You have the U.S. president making some incredibly bold statements about housing. You have
hmm
stock prices twitching like an exposed nerve. And you have some of the biggest institutional investors in the world seemingly scrambling.
On the surface, it looks like just more noise.
Exactly. Standard political theater, right. A politician yells at a corporation to score some points. We've seen that movie 100 times.
It is very easy to write it off as just that.
Yeah.
And usually, when we sit down for one of these, we're looking at the scoreboard. We're asking, who's up? Who's down? Did the Fed move rates? But today isn't about the score.
It's about the board the game is played on.
That's
That's a great way to put it. It feels less like a play in the game and more like someone went into the economy's, I don't know, settings menu and changed the rules. And that's our mission for this deep dive. We aren't just summarizing headlines.
right.
We're looking at this through a specific analytical framework from our source material, these documents labeled MGF-35. And their argument is massive. They suggest we're not witnessing a policy tweak, we're witnessing an update to the operating system of the market itself.
Exactly. And so the central question for us today is this. Is this story just about a corporation, specifically Blackstone and housing prices? Or is it something much bigger, a fundamental shift in the relationship between the state and the market?
Because the sources argue the premise of the market, the basic assumptions we've held for, 40 years?
At least
That premise just got an update.
it did.
Rewriting the premise of the market. That's a heavy claim. So before we get into the deep philosophy of it, let's just ground this in what actually happened for anyone who might have missed the specifics.
Sure.
What exactly went down?
In its simplest form, the U.S. president stood up and explicitly denied the validity of a specific business model.
He targeted the financialization of single-family housing.
Right. He didn't just say rents are too high or we need more supply. He essentially said that large institutions, and he specifically named entities like Blackstone buying up individual homes to bundle them into financial products, is no longer an acceptable way to make money in the United States.
Okay, presidents say things all the time. They criticize oil companies, they go after big tech. Why was this one different? Why did it feel like the ground actually shook?
It was the specificity
Hmm.
and the immediate market reaction. As soon as those comments were made, the relevant stocks just took a nosedive. Investor sentiment shifted from buy to sell almost instantly.
Mm.
But here's the critical part, and this is where we have to use that framework the sources call mini-field. It's a way of looking at structural pressure. The nonlinearity here is key,
Meaning?
meaning what actually changed in the real world at that moment.
Well, the stocks dropped. That's real money.
The price changed, yes. Yeah. But look at the mechanism. Did the Federal Reserve raise interest rates that morning?
No.
Did Congress pass some comprehensive housing bill that the president then signed into law?
No.
Did the SEC or the DOJ go out and padlock Blackstone's offices?
Also no. So structurally, the laws at 9 a.m. were exactly the same as the laws at 5 p.m. No new legislation, no new executive orders signed.
Precisely.
Yeah.
And this brings us to a concept in our framework called shear. In geology, shear is when two layers of rock slide past each other.
Okay.
Here you have the narrative layer, what the state says moving at lightning speed. You have the OS layer, the actual operating system of laws and regulations, which hasn't moved yet. But the market reacted as if the law had already passed.
That's fascinating. It implies the market is scared. It's no longer waiting for the legislation to be printed and signed.
It's treating the president's voice as a leading indicator of immediate risk. The language moved before the policy. The market heard the voice of the state and flinched before the state even lifted a finger.
And in doing so, the administration effectively redefined the housing market.
They did. They stopped talking about it as a space for, market efficiency where whoever has the most capital wins, and started defining it as a matter of social order and national security.
I want to pause on that because that feels crucial. Market efficiency versus national security. I mean, we think of national security as tanks, missiles, maybe cyber warfare. How does a three-bedroom house in a suburb become a national security issue?
It becomes a security issue when the instability of that market threatens the stability of the population. I mean, if you have a generation of people who feel they can never own a home because they're bidding against $1 trillion asset manager, that creates social unrest.
It creates a population with no stake in the system.
Exactly. The MGF-35 thesis argues that the state has realized that market efficiency, just getting the highest return on every asset, was actually cannibalizing the national security need for a stable citizenry.
So the state is stepping in to stop the cannibalization. But isn't that just regulation? We have rent controls, we have zoning laws. Why do the sources call this a structural shift? That sounds like a much bigger deal.
It is a bigger deal because of the type of control being exerted. The source draws a really sharp distinction between price control and meaning control.
Okay, let's unpack that. What is meaning control? That sounds a little Orwellian.
Think of it this way. Price control is the old way. That's the government saying, you can run this business, but you can't charge more than $2,000 a month for rent.
Right. It accepts the model exists, but limits the profit.
Meaning control is different. It asks, is this business legitimate or illegitimate? The state is drawing a moral and structural line. On one side is legitimate investment capital that builds factories, digs mines. On the other side is illegitimate investment capital that speculates on essential needs and destabilizes society.
And they've just tossed institutional home buying into the illegitimate bucket. They didn't say lower your prices. They effectively said you shouldn't be doing this.
Correct. And that's why Blackstone is so central here. It's not about Blackstone, the company. They're just a very smart, very efficient asset manager doing what they are legally allowed to do.
But they've become a symbol.
A symbol, exactly. They represent a financial operating system where a home is just another row on a spreadsheet to be optimized for yield.
Right. The source material had that really intense line. It said this model sucks up lifetime in the form of rent.
It's harsh phrasing, but structurally, it captures the friction. If a financial model requires extracting an increasing percentage of a worker's income just for shelter, you eventually hit a breaking point. The worker can't consume, they can't save, the economy stagnates.
So the state looked at this model and said, this financial logic is no longer compatible with the nation's future.
That's the argument. It's a collusion of operating systems. The financial OS wants profit. The national security OS wants stability.
And clearly, one of them outranks the other.
And the rule of history is, when the national security OS feels threatened, it always pulls rank. It doesn't care about shareholder value or quarterly earnings. It cares about survival.
Okay, so let's play devil's advocate here for a second. If I'm an investor, or just someone with a 401k, this sounds terrifying, you're telling me the rules can change just because the president decides a certain sector is now illegitimate.
Well, yeah. How does anyone invest in that environment?
Right.
That is the trillion-dollar question. And it leads us to the next big concept in our deep dive, the Great Rotation, or what the sources call capital forced migration.
Forced migration of money, not people.
Exactly. Think of capital like water. It flows away from pressure and toward open space. For 40 years, real estate was that open space. It was safe. It was leveraged. Now the state has created immense pressure on financial real estate. They've made it hot, dangerous.
So if you're a pension fund with billions of dollars that has to be deployed somewhere and housing is now a danger zone, where does that money go? It can't just sit in cash.
The sources argue that the state is intentionally steering that flow. They're guiding it toward what they call national security capital.
Which means what specifically?
Energy, domestic manufacturing, the defense industrial base, supply chains, critical resources like copper, lithium. The state is effectively designating where investment should go.
But they aren't doing it by nationalizing industries or passing Soviet-style 5-year plans.
No, they're doing it by making the old playground housing speculation too risky to play in.
That's a very subtle, almost ruthless form of industrial policy. You don't have to subsidize the new factory if you just make the alternative terrifying.
Exactly. It's a push factor, not just a pull. And this is where we have to talk about plausibility over certainty. The sources emphasize that we don't have hard laws yet, but the plausibility of danger is enough to move the money.
But laws can be repealed, right? Presidents change. Couldn't the next administration just say, just kidding, we love private equity and housing, come on back?
That brings us to the crucial difference between reversible and irreversible change. The policy. That's reversible. A new president could absolutely sign an executive order welcoming them back. That part's easy.
So why is this a structural shift if it can be undone with a pen stroke?
Because the trust structure is likely broken irreversibly. This is a key point in the MGF-35 article. Until now, the investor assumption was, the market is safe ground. If I follow the written laws, my capital is safe.
That deal is broken.
It seems to be. Now, every investor has to internalize political risk into every single decision.
You mean even if something is legal today, they have to worry it might be declared illegitimate tomorrow?
Yes. Once the state shows it can and will demonize a business model for national security reasons, you can't unring that bell. You now have to calculate what's the probability the president wakes up tomorrow and decides my business is a threat.
That fundamentally changes the math of valuation. It implies that assets aligned with the state, a defense contractor, a domestic chip factory, might actually trade at a premium.
Purely because they're safe from this kind of political attack.
Yeah.
Yes, we are observing a gradient. The pressure is moving away from purely financial efficiency and towards state-aligned security. The market isn't dying, but it is becoming subservient to the state in a way we haven't seen in the West for a very long time.
It sounds almost mercantilist. The economy serves the nation, not the other way around.
It's a return to a form of it, yes. It's a definite break from the neoliberal consensus of the last 40 years, which basically said that if the market makes money, it's good for everyone.
And the state is now saying, not necessarily. Sometimes making money breaks the country.
Right.
I want to circle back to the mini-fields framework for a second. We've established the shear and the gradient. The source also mentions a GOA-L3 transition. What does that mean in plain English?
GOA-L3 is the source's code for a level 3 goal optimization. Essentially, it means the system is in crisis management mode. Level 1 is growth. Level 2 is correction, like fixing a recession. Level 3 is survival.
So the national operating system is rewriting the rules because it believes the current path leads to systemic failure.
That's the thesis. This isn't just about tweaking the economy to get inflation down a few points.
It's about avoiding a crash of the social order.
Yes. The state sees the housing crisis not as an economic problem, but as a social stability problem. And you solve those problems with very different tools. You don't use interest rates, you use power.
Which leads to the question of what's next. If this is just the first domino, what are the others? The source mentions next news gradients. What should we be watching for?
Well, since we know the logic, meaning control, based on national security, we can look for other sectors that fit the profile. The first trigger to watch is scope. Will this illegitimization logic apply to infrastructure?
Give me a concrete example. What would that look like?
Okay, take data centers. Right now, huge investment vehicles. AI needs them, but they consume massive amounts of electricity and water. What if a foreign entity, or even a large private equity firm, starts buying up all the power capacity for data centers and local energy prices spike?
The state could step in and say, data is a national security asset, energy is a national security asset, you can't treat this like a casino.
Precisely. If we see the president or regulators start using that kind of language around data centers or agriculture or healthcare, we know the meaning control is expanding. That would be a huge signal.
And what about outside the U.S.? This can't be just a U.S. problem.
That's the second trigger, international replication. Europe, Canada, Australia, they all have housing affordability crises. If they see the U.S. successfully redefine the market this way, well, they might copy it.
It's a contagious idea. Hey, look, the Americans just yelled at the investors and prices softened. Let's try that.
And if that happens, this becomes a global shift in the operating system of capitalism. It changes the entire global risk landscape.
It's fascinating because for my entire adult life, the narrative has been that government is slow and clunky and the market is fast and smart. This suggests the government has found a way to move faster than the market.
By using narrative, they realize they don't need to pass a law to move the market. They just need to break the narrative that the market is safe. It's asymmetric warfare applied to economics.
So it flips the script completely. The market is now following the state, trying to guess where the safe zones are.
It's not leading anymore. And that creates volatility. We talked about shear earlier. Friction creates heat. We're going to see a lot of heat in the markets, not because of interest rates or earnings, but because of this friction between the old rules and the new reality.
This has been, honestly, a lot to process. We started with a headline about Blackstone and ended up discussing the rewriting of the social contract between capital and the nation.
And that's why we do these deep dives. If you just look at the stock price, you might panic. Or you might think, oh, I'll buy the dip. But if you look at the structure, if you use this framework to see the pressure, you realize buying the dip might be the wrong move if the premise of the asset has changed.
Right. You don't want to buy the dip on an asset class that has just been declared an enemy of the state. That's not a value play. That's catching a falling knife.
Exactly. Knowledge of the price is useful, but knowledge of the structure, that's a superpower.
So I want to leave you, the listener, with a final thought to chew on. We've discussed how housing, a basic human need, was just removed from the pure financial speculation bucket.
It sets a very powerful precedent.
It does. So here's the question. If the state can say housing is off limits for maximum efficiency, what else is on that list? Food. We have massive corporations optimizing food production, healthcare. We have private equity buying up hospitals.
Those are the exact same dynamics.
If the promise that the market knows best is officially broken, where does the line stop? At what point does the state decide that your industry is too important to be left to the market?
That is the question of the decade. And the answer will determine where capital flows for the next 20 years.
Something to think about while you're watching the news tonight. It's not just noise, it's the sound of the machine changing gears. Thanks for joining us on the deep dive. We'll catch you next time.